When it's at a million, will you regret having bought it at 100,000? When it's at 5 million, will you regret having bought it at 100,000? Wall Street doesn't understand this asset, and there are going to be some bodies carried out on the next run up. Ultimately, everybody's going to have to buy this asset. Everybody. I mean, I don't care how much you hate it, you're going to ultimately bend the knee. And so it's just a matter of, I think they know they've got to go towards gold and Bitcoin. And then I think they all understand that, the Chinese have a lot more gold than we do. There's a very solid argument to be made that they should just, to the degree that they're going to do a reset or a reval, that they should just, Bitcoin moves and it moves even further than gold. And that's because I'm like Sailor. I mean, it's going up forever. The only remaining risk is the dip.
Larry, so we were just talking about numerous things offline here. It's incredible to have you. I think there's so many big things going on. The 401k is being opened up by the administration. Just the flood. It seems like there's a constant flood of information every single day. Whether Bitcoin, obviously, and just crypto stuff, but then also gold and silver. There's so many positive headlines. We're going to get to a bunch of it, but I wanted you to touch on just the 401k stuff and just kind of what your thoughts are with that being opened up.
I think, first of all, really nice to be with you again. Great to do this pod. As you know, you're one of my favorite guys on this whole space.
Thanks, Larry.
Probably most people don't know how good a hockey player you were, Olympic team, etc. But anyway, they should know that. Pretty cool. And I saw it firsthand when he got a hat trick up in Montreal at the conference. Skated the whole game. Anyway, so my background, my view on the 401ks, this is positive. I mean, this is more capital being freed up. I mean, there'll be a little bit of an issue of the devil's in the details. I mean, right now, will you have to get a self-directed 401k? Or does that mean that the Fidelities and the Vanguards and the, Schwabs of the world are going to let you instantly put your 401k into, Bitcoin or private equity or, gold or silver? I mean, we don't know. We don't know exactly how it's going to come down. But the notion of freeing up a lot of that money, and it's good and it's bad. I mean, it's good in the sense that people should be able to put their money wherever they want to do it. And there's actually a pretty good workaround for that right now. And we've had clients who put money with our firm who've done this, which is to get a self-directed IRA. I mean, if you have a big IRA account or if you have a 401k account that you have the ability to select stocks in or select investments in, you can move that account away from whoever your administrator is, get an independent administrator, and then you're able to buy Bitcoin, cold storage. You can buy real estate, you can buy gold coins, you can buy a lot of things. So there's always been a workaround, but the average person doesn't really know that. And it's a couple $1,000 to get the administrator and the legal work to do that. But look, opening it up for everybody formally, like they did, that's a great thing. I mean, with the possible risk that, the private equity guys and the LBO guys are going to try and market, all their toxic stuff to the same group. And they just view this as a big honeypot. I don't know did you see the numbers about how big this 401k balance area was? It was like 12 trillion or something. It's a big number.
I think it's like 12.5 trillion, I believe I saw.
It's a big number. Yeah. So the devil will be a little bit in the details, but hey, it's all good. And, I think that it will bring more money into Bitcoin eventually, clearly. And that's a positive. So, and what it also says is just that this administration, I mean, all the moves they're making, we go to this next. I mean, there are just so many positive moves that they're making in the direction of sound money. I mean, the Stephen Mirhan being put into the Fed seat. I mean, this is a guy who's very positive on Bitcoin. This is a guy who wrote a paper that talked about, how we have to end the dollar as the neutral reserve currency and move to a more neutral, actual neutral reserve currency. And there are really only two choices, Bitcoin and gold. And so, we've had Trump say things like he who has the gold makes the rules. We've got the strategic Bitcoin reserve legislation that Loomis is pushing. There are a lot of signs out of Washington D.C. that are extremely positive, for Bitcoin. But honestly, Bitcoin doesn't really even need the government to survive. I mean, I think Bitcoin will survive with or without the government, just because it's such a great alternative. It's just that those things could accelerate it, right? And that's a positive.
Do you think that what do you think Jay Powell's future is? I mean, I know there's rate cuts are getting priced in. People think it's, I feel like we keep like, oh, they're going to cut. What do you think the future is?
Yeah, it's funny. I just checked the CME rate cut site that gives you kind of the odds on that sort of thing. And right now the market is saying there's an 86% chance of a cut this fall or in September. So he's certainly got the cover to cut. I mean, with this most people are probably aware of it, but we had a huge downward revision in the employment numbers maybe a week ago or a little more than a week ago. And that was, that gives him some cover. I mean, he's always said he's going to be data dependent. and the employment market is strong, and therefore I don't have to worry about the rates being too high. This data would indicate that maybe the employment market's not so strong. And of course, Trump fired the guy who reports the numbers, which I thought was hilarious. But anyway, he's got the cover to cut, and in theory he should cut. And typically what happens is the Fed tries to kind of follow the 2-year rate, the 2-year U.S. rate, and right now the 2-year rate is 3.8, and they're at 4.445. So it's clear to me that the rate should be coming down, all else equal. What is interesting about it, in my point of view, though, is that Powell's a human being, and I think Powell knows that, he understands how messed up the system is. He understands that we're going to have inflation in the future. And he really doesn't want to be Arthur Burns. He wants to be Paul Volcker. And Arthur Burns was a Fed chairman who cut rates too early and let inflation run wild. And Paul Volcker was the guy who slayed inflation. And remember that Powell is out of his office in May of next year. I mean, his term expires in May of next year. So, it's not that far away, 9 months or so. And, he's basically thinking about his legacy. And, I think my gut is he's going to say, well, I want my legacy to be that I did not let him, I tamed inflation and I didn't let it come back. And therefore, I'm going to hang on to, these higher rates, even in spite of the fact that he says he's data driven, but the data suggests he should be dropping them. But I don't know. I mean, I'm a little bit torn on this one. I mean, it could go either way. Who knows? He did have 2 dissents. I mean, it would not surprise me at all if he capitulated and dropped them, but it also really wouldn't surprise me. I kind of rate it 50-50 that he's going to do what he thinks is best for his legacy, which is to continue to be a tough ass until he's absolutely forced to drop them. So we'll just have to wait and see.
Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. Now that you have the professional team in place, you need the professional tools to store your generational wealth forever on a titanium C plate. Your 12 to 24 words are your generational wealth. That is the key for your Bitcoin, no matter where you are in the universe. Go to Stampseed, code Brandon at checkout for 15% off store-wide. This withstands fire, flood, nuclear fallout. We shot hockey pucks this thing. Don't become a statistic and put your generational wealth in paper. Go to Stampseed now, code Brandon at checkout for 15% store-wide to secure your generational wealth forever. You mentioned revisions a minute ago. There's so many competing news headlines. You can't, it's almost impossible to tell what's actually happening out there. Right. I mean, unless it's just anecdotally and you're going around business to business and figuring, but do you think that the economy, they keep revising stuff? Is it better? Is it kind of better than it looks? Is it worse off than it looks? Who is it better for? Who is it worse for? Like when you get a general sense of what's going on, like, what do you think?
Yeah, there are a lot of moving pieces. It's a really tough call. I mean, I can't make the argument that it's a lot better off than it looks. It may not be as bad as the doom people think it is, and it's all going to fall apart. I mean, the employment is clearly getting softer. Consumer sentiment is clearly slowing down, but the airline data, people boarding airplanes is still pretty healthy. It depends on kind of where you look. And one thing that's really holding it up is all this AI spending on data centers and electricity power and, et cetera, et cetera. I mean, we're spending billions and billions of dollars in CapEx to build out the AI network. And the other thing that's holding it up is just the stock market and the wealth effect of the stock market continually hitting all-time highs. I mean, I must say when Trump came out and said, we're going to put these massive tariffs on and the market took a 15% spill, I thought, all right, that's it. It's over. The bubble popped. And yet here we are. And, people just bought the dip because they've been trained to buy the dip, and there's a lot of capital sloshing around out there, and so people, there are a lot of carry trades going on, and someday these carry trades will end, and someday buying the dip I don't think will make sense because the dip will be bigger than they can solve. But so far that day hasn't arrived, and so I think my last quarterly letter, which is available on my website, came out, and I talked about how it's possible that what we're seeing here is kind of a crack up boom, where everything is going up, including the stock market, and that's gold's going up, Bitcoin's going up, stock market's going up, bonds are flat, they're not falling apart, but they're flat. I think they will be going down eventually, but they're kind of, I mean, and one of the things that I think happened since you and I last spoke is, and this happened a month or two ago. Recall that they came out with those and they said, we're going to cut 2 trillion, which was a joke. Then we're going to cut 1. Oh, well, maybe it's 150. Well, I've looked at the numbers now and it doesn't even look like they're going to get the 150. No doubt they cut some silly programs and they saved some money. I give them credit for that. But in the context of a 1.8 to 1.9 trillion dollar budget, it's not that much. And then the big, beautiful bill comes along and adds, depending upon who you believe, between 200 and 400 billion dollars a year in expenditures, and defense spending goes up. And so, it's interesting to me the way the Trump administration pivoted from we're going to balance the budget, make America great again, to we're going to grow our way out of this. and honestly, there's an argument that says they really do have to do that. I mean, the way to get out of a debt spiral where you've got more debt growth than GDP growth is to amp up the GDP growth. But and the healthy kind of GDP growth would be based on productivity. But the other kind of GDP growth you can amp up is inflationary GDP growth. And so, my sense is, the Fed is, I mean, and one of the things we know, and I think this is also going on in the markets. Okay, this is interesting. So we know, I mean, Trump's been attacking Powell, right? Just ruthlessly.
Right.
I mean, attacking him, saying rates are too high, and Pulte, he got all these people involved, and Pulte and others involved. And what he's doing, obviously, is trying to put a lot of pressure on him. Which it probably is actually counterintuitive, not going to work, because the more he pushes, the more Powell's like, screw you, I'm going to be Volcker.
Mm-hmm.
But here's the thing: the markets are forward looking, and what we do know is that in May Powell's gone. So the markets might be saying to themselves, okay, and even Besant has acted on this. I'll talk about that in a minute. Markets might be saying, well, okay, rates are higher than they should be right now, but we know with high confidence that in May of next year, there is going to be a new Fed chair, and he's going to be a dove. And Trump said something along the lines of, we're going to take rates down 300%, 300 basis points, or 3%. So that would take you from, 4.4, 4.5, whatever, down to, 1.5 or something. I mean, it's crazy. And, everyone's HELOC costs would go down. I mean, everyone's borrowing costs would go down. Borrowing would explode, and so, I think anticipating all that, I think that's why everything's kind of hung together. It's funny, it's interesting too, because Besant, Treasury Secretary, when he came in, he really heavily criticized Yellen for not terming out the debt, which is to say, when rates were low, in the COVID era, she should have been selling 10, 20, 30-year bonds because the government interest costs would have been lower if she'd sold those. Now, I would argue that she couldn't sell them because there wasn't that much demand there, but whatever. She didn't sell them. She sold short-term bonds. She really tilted the whole debt refinancing game to being selling short-term bills that rolled over quickly. And people will buy short-term bills because they don't have duration risk on the interest rates. And so the Senate criticized all of that. But then, of course, he came in. He's been doing the same thing, doing what he criticized her doing. And my sense is he's doing that. And what happened is he got in there and he read the market, and he got read in on, guess what? There's not that much demand for these long bonds because everyone knows we're out of control on our spending. And so in the most recent quarterly refunding report, he said, we're even going to tilt more heavily towards these short-term bonds. So I think what they're thinking is, okay, well, if we're financing the government short-term, and in the low fours, but they roll over pretty quickly, we know that we can do that. And then hopefully what will happen is when the new guy comes in, we'll cut rates down quite a bit, and short rates will fall quite a bit. And therefore, we'll get our financing costs down as we roll over those short bills into new, cheaper short bills or cheaper interest rate short bills. So that's kind of the interesting position we find ourselves in betwixt and between the old Fed regime, but what everybody pretty well knows is going to be a new, lax Fed regime. And because Trump has just made it very clear. I mean, and he's not going to put somebody in there that's a hawk. I mean, he's just not. I mean, so, and whether Mirren is the guy or not, it's a little unclear. I mean, there's some language that said Mirren might be a placeholder until such time as Powell leaves, and then Mirren might resign. He might put somebody else in, like Walsh or whatever. But we'll have to see. It's unclear how it's going to unfold. But I think the market and particularly the gold market and the Bitcoin markets are smelling future money printing. Bond market a little bit less so. I've been kind of surprised at how well the 10-year has kind of hung in there in the mid fours. That could change, but so far it's hung in. So we'll just have to wait and see. On the economy, what do I know? I just don't know. I mean, one thing that helped it more recently is when this whole tariff thing was coming through. There was you got a little bit of a tariff bump. Everyone's like, okay, well, if we're going to have tariffs, those are going to be inflation. That means things are going to cost more in the future.
Mm-hmm.
Maybe I ought to buy something now. I'll cite a perfect example of me personally. Okay. I had a 12-year-old Ford F-150 that had 130,000 miles on it. It was pretty much shit beaten, close to being dead. And I use my pickup truck a lot. I like it. And Trump tax thing got passed. The big beautiful bill got passed. Well, first thing they did is they said 100%, depreciation. You can take all the first year depreciation on a truck or service vehicle in year one. Of course, I'm gonna have to argue that I use it for business, and that may be a little bit of a stretch, but some of it I do use for business, and carting books around. And
Right.
the second thing I thought is, this F-150, I bought the very cheap, low end model with an 8-foot bed. This F-150 is in the high 30s, low 40s. Even though Ford makes a lot of stuff here, I just know there's going to be more inflation in the future. This is probably a good time to pull that demand forward and buy that truck, because I think in 2, 3, 5 years, trucks will be more expensive. So, and I'm suspecting some other people did the same thing. I mean, I certainly, I can't see how this doesn't push the price of all foreign cars up. So, and we're seeing, I mean, the fly in this ointment, Brandon, is that there's just a lot of inflation out there. I mean, it's just everywhere you look. It's in insurance, it's in food, it's in commodities. I mean, whenever I see a bad inflation report or real life compared to the 2 or 3 that they're gaslighting us with, it's nowhere near a realistic estimate of what the average person is seeing. I mean, we're all seeing much higher rates of inflation than 2 or 3%. So,
yeah, no, it's true, and that's why it's such a confusing time. Do you think that I want to touch on some 2020 style, just gold and silver Bitcoin run here, because it feels a bit like that. But first, I want to talk really quickly about the U.S. It feels like the U.S. when you're talking offline a little bit that they know what we know as Bitcoiners and hard money advocates, that there's a monetary transitioning happening, and it seems like they are front running it, and they're trying to get ahead of that. There's obviously the BRICS, the SDRs, there's different global currency competitions going on, just the government currencies themselves, and on top of all this. So what kind of sense do you get?
I think that's
you get
right.
that
I mean, we
sense
have
too.
to read the tea leaves, and they're not saying it obviously, but if you read the tea leaves carefully, I think that's right. And I suspect, so I think they realize that we're losing our reserve currency status slowly but surely. It's not going to go away. I mean, but it's slipping. And I think they recognize that we have to get rid of, being the world's reserve currency because of the, the Triffin dilemma effect and the way it's hollowed us out. And so I think they know they've got to go towards gold and Bitcoin. And then probably more importantly, I think, and I look at Mirren's writings, I look at what he said on Twitter. I think Mirren and probably Besant and certainly Lutnick, I think they all understand that, the Chinese have a lot more gold than we do. And the Chinese don't believe in Bitcoin, and Bitcoin's the future of sound money. And so there's a very solid argument to be made that they should just, to the degree that they're going to do a reset or a reval, that they should just skip gold and go right to Bitcoin. Now, I don't know if politically they can do that. I don't know if they can even pull off a gold reval. I mean, Trump's got 4 years in which to do it. And, my conspiracy theory said that's part of the reason why all the imports from London and Switzerland into the U.S. shot up so heavily this year. I mean, let's go back a bit. Remember when they were first elected, they said, oh yeah, we're going to do an audit of Fort Knox, right? I mean, there's no doubt we're going to do an audit of Fort Knox, blah, blah, blah. Just like we're going to release the Epstein files. I don't have to go there.
Yep.
That's gotten really quiet. That's never happened. And, and in the past they said the audits are too expensive, which is just absurd. I mean, for a couple $1 million, you could get some good accountants to crawl all over it and figure out what you got. And they stopped that. And I think the reason they stopped that is they got in there and Besant got read in, and he went and he did all the research, and he realized that what Andy Schechtman and other guys like me believe to be true is true, which is that in the 60s, when the London gold pool was in existence, Johnson, and I know this because a guy who knew some of the Johnson, an older guy who knew some of the Johnson administration Treasury officials told him that Johnson sent gold from Fort Knox to London to try and help the London gold pool, and then didn't get it back and was really pissed off. So while there is clearly gold in Fort Knox, don't get me wrong, it's not empty. I don't think I don't think we have everything we claim. And so my sense is that it's possible that, Besant and Trump went to work on trying to fix that. And that's why we saw all our gold imports from London and Switzerland really take a big jump up in an earlier part of this year. So, and that's also why we haven't seen or heard anything more about auditing Fort Knox. It's kind of gone silent. It's kind of like, don't look over there. So, it's unclear. It's very difficult to know how they're going to play these cards, but they're not stupid men, and they do understand the situation that we're in, and they have to do their very best to move us in a direction that gets us closer to where we want to be. And I think they're doing that with all the actions that we see. And it could result in some really big action where they do a complete reset. I mean, the problem is, some people say, well, that's fine. Why don't we just revalue gold to today's market value? Well, that'd be nice, but it would only get you, $1.5 billion or $1.5 trillion or something. I mean, to really get a big dent in the debt and get it to the place where get our balance sheet to the place where it needs to be, I mean, you got to take gold to 10 or 20,000, and that would be kind of a shock. And so, and geopolitically, I don't know if they want to do that. I mean, I'm not sure what the reaction of everybody else would be. So it's really hard to tell, Brandon. I don't know the answer, but I do feel like in this administration we have people that, generally speaking, are on our side. I mean, JD Vance completely gets it. I mean, Luke Gromen has done some great work in his newsletters, pulling out quotes and statements that Vance has made about how, the resource curse of West Virginia with coal, and how having the reserve currency is really a curse, because it hollows out, it makes your currency overvalued, and then you hollow out your manufacturing. And the most recent place where that's really come to fore, and Groman also has done a great job of pointing this out, is just, we're having a hard time. We couldn't fight a war with China right now because China has a lot of the shit we need.
Yeah.
I mean, I don't know how much you've been following or reading about all this rare earth stuff, but we're woefully deficient in rare earths, which is why they made the $500 billion investment in I think it's $500 million investment in MP Materials, out west, and so we've got to really, and Trump's trying to do as much as he can, as fast as he can, and I applaud him for all of that. But I also say, as I look at it, and just like Doge trying to balance the budget, I mean, you've got 20 years of bad policy here. And I don't care if Trump's God, you can't fix 20 years of bad shit in 4 years. Maybe you can start to turn the ocean liner in the right direction, which I think he's doing. But it's going to take time, right?
Do you, really quick, because I want to segue here in a second, but really quick, do you think the government, so we talked about Fort Knox, my other question was auditing of the Bitcoin, which obviously could be very quick. Right? Is that part of the game too, where they're like, they don't want to tell what they actually have? I mean, it's kind of these smoke and mirrors games.
What did Biden do with it? I just don't know. Right. I mean, we all thought that they had somewhere in the neighborhood of 200,000 coins, right?
Yeah.
But then somebody came out and posted, well, yeah, but the immigration, there's a,
U.S. Marshals or something like that?
The Marshals, right. The Marshals say, well, we've only got 35 of it. Okay, fine. But, some of is the other somewhere else? I mean, they've all kind of gone silent on it, right? And so that's interesting. What does that mean? I mean, it would be nice if they would tell us, what they've got.
Bo Hines, leaving. It's like you have all this weird.
I don't know how to read that. I don't know what that means.
I know.
I'm not smart enough to know. I mean, he was a lobbyist. I know. And, I don't know if that's a good thing or a bad thing. I mean, it's right. It's very hard. I mean, with all these things, we're just kind of looking at the tea leaves, and just trying to kind of read and guess where they're going. But I would say this. I mean, look, the Trump kids have bought a ton of Bitcoin. They went to Saudi Arabia, raised a bunch of money. I think they used a lot of that money to buy Bitcoin.
Mm-hmm.
Eric has said over and over again, it's going to $1 million a coin. I mean, I think that the bottom line is I think they're on our side. I mean, I think they're basically on our
Mm-hmm.
side. Now, true hardcore Bitcoiners would say, well, I don't want the government to be on our side because the government's evil, and I don't even want them buying it because who wants to prop up the government? And I hear that, but in my view is I'd rather, as bad as the U.S. government is, I do prefer it to the Chinese government and the Russian government. So,
Mm-hmm.
so to the degree that they are buying, we do have the Bitcoin, and Biden didn't sell it. That would be a good thing. And to the degree that we can pass the Lummis bill and start buying more, I think that would be a smart thing as well.
Yeah, and as long as I know you're the same as me in the sense of we come down the cypherpunk side of like, yeah, you don't want the government to get it, but at the end of the day, it just feels inevitable that the government, or big companies are going, if it's what you and I and other Bitcoiners espouse Bitcoin to be, then clearly other people with large amounts of money are going to see the same thing eventually and want in on that too. That's just
Absolutely.
inevitable. And you got to get the Trojan horse inside the gates in
Yeah.
order to start taking down the government piece by piece. So I don't know how you square the circle
No, I
other than
think
that.
that's right. I mean, I think
It's
that's right. I mean, ultimately, and it's, I know outsiders listening to Bitcoiners find this nauseating, but ultimately, everybody's going to have to buy this asset. Everybody. I mean, I don't care how much you hate it, don't believe in it, don't want to do it, think it's a joke, whatever. You're going to ultimately bend the knee, and so it's just a matter of when, because it's just going to keep on marching, and that's the
yeah.
hard thing I think for the average investor, the average citizen, the average person to get their arms around because it's new, it's a technology, it's a technology breakthrough that did not exist before, and so I mean, when the Wright brothers flew, did somebody think you were going to be able to take a supersonic plane from New York to London in 3.5 hours? I
Right.
mean, no fucking way, right? I mean, it
Mm-hmm.
just seems so absurd as to be ridiculous. It took 2 weeks on a steamship to get to London, but here we are, and so I think it's of the same kind of nature. It's just it's big, it's inevitable, it's going to keep going, and at every level, it'll become more and more obvious that this is something that should be done. And which, by the way, that also speaks to the issue. I mean, I find in my orange pilling efforts, probably, I mean, I've over the years I've encountered all kinds of resistance. So one of the biggest, relatively intelligent ones was, well, the government's going to kill that, and all right. I explained they couldn't, but I get it. When the ETF came out, that narrative kind of died down a little bit. I think the narrative now that's kind of got a lot of people is, oh Christ, you bought it a lot cheaper. I can't pay $120,000 for this thing. I can't
Yeah,
afford a whole
it's a
one. Well,
big
you
one
don't
right
need a
now.
whole
Yeah.
one, right? And that's really, fixing on a number and looking in the rearview mirror. I mean, look, Max Kaiser bought it at $2. I mean, my first one was 300. So, um, and I wasn't sitting there. I mean, I wish I'd been Max, but I wasn't, and so be it. It's. I mean, when it's at 1 million, will you regret having bought it at 100,000? When it's at 5 million, will you regret having bought it at 100,000? I think no. And I'm a firm believer. I'm like Sailor. I mean, it's going up forever, Laura. And I don't know if the number is 7 or 13 or 15. I don't know exactly the slope of the curve. I mean, there are a lot of things that can happen policy wise, regarding the dollar that can make it go up faster or slower. I mean, if I mean, I think the power law is a pretty good descriptive model looking backwards, and I use it as my base case looking forward. But all these models are meant to be broken because this is something new and different. And at some point in time, this one will be broken to the upside. I mean, that's the Gresham's law, hyper Bitcoinization. I mean, when everyone realizes the dollar is toast, it's going to take the power law and just throw it in the trash and go up, really quickly, very, very, very aggressively. So that's coming, but that day might be 10 years from now. I don't know when that
Mm-hmm.
day is, you know, it could be,
Yep.
I don't think it
Absolutely.
could be any sooner than 3 or 4 years from now, but it's coming in my view.
And as our friend Jeff Booth always says, right? I mean, if it stays decentralized and secure, like you said this too, it's inevitable. Like it will
Yeah,
continue to eat every other asset. It's literally impossible not to do that if it stays decentralized and secure. And I think that's the importance of all of it.
I think that's right. I mean, I think the only, in my mind, the only remaining risk is the technical risk. And I think that 16 years of trial and error and everything else is beating it out of it. But then I mean, I listen to Mechanic and I hear some of the concerns about what core is doing. And I mean, it's
Right.
interesting. I saw Saylor in Miami had a chance in a small group to ask him some questions, and we asked him. This was years ago now. It's probably 22 or 20. Anyway, and we said, hey, what are your major concerns? He said, the only concern I've got is that core goes rogue, and that that human beings want to somehow mess with this thing, fix it, change it, do something stupid, that takes it away from the primary use that we're all
Yeah.
believing in. And that still kind of holds. And I think, but even that risk, I mean, I think if core goes, I mean, everybody does vote on it. All the nodes vote on it, all the miners vote on it. So I don't know. I don't perceive that risk to be that large, but it's not zero. You know.
And the beauty of it is we have, what Ocean's doing. I just interviewed Ian Norton the other day, the chief legal counsel of Ocean, who's probably one of the smarter guys I've ever talked to in the
Absolutely.
Bitcoin space.
Yeah.
Yeah, I mean, just
Absolutely.
obviously Bob Burnett and Mark and all those
Those
guys,
guys are doing
mechanic
the
at
right
Ocean.
stuff. Yep.
Yeah, it's incredible. And in custodying, running your node, custodying, mining with those guys. I mean, you solve a bunch of the problems that well, I shouldn't say the one or two problems that Bitcoin has. They solve it. Like that, it's solved
No,
doing that.
right.
Running
That's
knots and just
exactly right.
decentralizing the system.
That's
It's
exactly right. In the same
so.
way that other people point to quantum as the risk, and if you talk to
Mm-hmm.
Lynn or Preston about quantum, and what they say is, look, to the degree that arrives, it's a long way from arriving. I mean, a really, really long way from arriving. But if it were to arrive, then you would apply it to the SHA-256 algorithm and change it to be quantum proof or
Mm-hmm.
quantum protected, and there'd be a hard fork, and everyone would move to that. So I think we've now got something that we can conclude is robust enough to kind of go on for a very, very, very long time. And so that's not
Agreed.
my concern. I mean, if you ask me my concerns, I mean, one concern I have is that, they'll do the big print, Bitcoin will go to, I don't know, call it 250, 300, 400, 500,000. And then everybody and their brother, and let's call that within the next 2 years. Okay.
Mm-hmm.
And at that point, everybody and their brother will be coming into it. Right. And
Yeah.
just like, and everyone will be talking about it, and everyone will say it's going to 1 million. And so people will be buying it. And, people get too leveraged, too out over their skis, too this, too that. And then the 4 year cycle, which maybe now will become the 5.5 year cycle, will kick in and will correct from 400 down to 200. And the last guy
Mm-hmm.
that bought at 400 will feel like, oh my God, I got snookered. But,
Yes.
the 200 will be a new base on which we'll launch to 2 million. And so,
Yep.
it's just, I mean, the thing that cannot be ignored, and I think sometimes Bitcoiners don't do an adequate job of describing to a newbie who's looking to put some money into it, is to understand that the thing does draw down from time to time, and not in a small way. I mean, we've had multiple very large drawdowns. And so when people say to me, I want to get into it, how much should I put in? I ask the question, I say, well, if you put your money into it and it goes down 50%, are you going to think this is a bargain? I want to buy more, or I made a mistake, I need to sell it? Because if it's I made a mistake, I need to sell it, you bought too much to begin with. If it's this is a bargain, I want to buy more, you're thinking correctly, and your allocation was correct. And so, because I mean, I started in 14. I've been through multiple drawdowns where I watched the amount of it I own go down a whole lot. And I just said, I don't care. In fact, I'm a buyer. I bought after 2017, and in 2018, I bought in 2019. I bought on the Sam Bankman-Fried dip. I mean, but by the way, before Sam Bankman-Fried, I paid 65 for it. But that
Mm-hmm.
65 now looks
Yep.
pretty cheap compared to 120,
Yeah.
so it's all, and I try to use the example of Amazon. Bill Miller held it from the beginning. I mean, that thing went through, it was same thing. It was a network effect. It was a big business. It was growing. It was driven by the internet, just like this. And, it drew down 50% multiple times, but it always, the low on the drawdown was higher than the last low. And then the next high went on to be a newer high. So a new higher high. So, you know, I mean, I think it's just, if you have a long-term perspective, and sadly, so many people don't. I mean, and this is, I mean, a lot of people were in it really early. I mean, I know a lot of people who had hundreds of coins that they bought at, $30, $100, $500. And it got to 3,000. They felt like they'd really scored, and they sold it.
Mm-hmm.
They didn't
Yeah.
really understand what they owned. And so one has to really understand what it is, and take a long view. And when you do that, you realize it's just a compounding machine from now until the day you die. So.
Yeah. Hey, I couldn't agree more. I want to talk a little bit about gold and silver and the run they've had, and then that, like you said this a lot. The metals tend to front run Bitcoin, and they tend to be the thing that sniffs things out the most. It's
Particularly
something
gold.
government,
Yeah,
central banks, yeah. And so
yeah.
now
There's
it
no
feels like
question.
2020 a little bit, right? Like we're in
Yeah, it
August and gold and
does.
silver are really running, and then a couple
Well,
months later,
Bitcoin's run
Bitcoin shot.
too.
So I'd
Yeah,
love your
but it took a little
yeah.
while. Gold ran first. Yeah,
Mm-hmm.
yeah. So I mean, well, first of all, everybody knows what gold is. Not everybody knows what Bitcoin is. A lot of people, everyone's aware of it, but the ownership is much lower as a percentage. I heard on something this weekend that it was like U.S. is 8%. I've heard other people say it's 14% of the people own some crypto, which I hate to even limp all the other shit in with Bitcoin, but I would think, I feel like we're kind of at that Gladwell tipping point where maybe 10% of the country owns Bitcoin now. Maybe. I don't know. Maybe it's a little less. But everyone knows what gold is, and gold's your go-to inflation hedge. And so it does tend to smell out debasement. People tend to look at the government's behavior and say, okay, they're spending more than they're bringing in. Therefore, they'll have to debase. They haven't done it yet, but we know they will do it. It started, and you could see this. I mean, gold multiple times has broken out in advance. It's funny. Gold moves and then they debase, and it's kind of like it's almost as if gold could look around the corner. And then after the gold move happened, there's some great charts that lay gold and Bitcoin on top of one another. Bitcoin moves, and it moves even further than gold, and that's because it's got two adoption curves. It's got, this is sound money insurance, but it's also got this is a new form of asset that very few people know about, and more people are learning about every day. And the supply is fixed or close to fixed. It's 0.8% annual growth today, and gold's 1.7% annual growth in supply, and that 0.8 is going down every 4 years. So long story short is that, yeah, I mean, I'm very bulled up on all of these assets. I mean, probably the most exciting one right now, and a lot of people say it's a shit coin, and it kind of is silver, and that's because silver has been just suppressed for so long, and it's got two roles. It's a monetary metal, but even more importantly, in my view, forget the monetary role. It's actually an essential element that's needed in solar and in batteries
Yeah.
and in a lot of other applications. And we've been running a deficit for a long time. There's a coin shop near where I live where every day, every time I go in there, I see a few more tea sets, and so grandma decided she needed some cash, and she picked up
Yeah.
all her tea set and walked over, and this guy weighs it and gives her some fraction of the melt value of that stuff. And so there's a lot of silver sitting around in the world, stored in various places, but there's not a big inventory of silver, and it's a small input to whatever it goes into. So if its price goes up, the buyer is pretty price insensitive. It gets used in electronics, and there are charts that show that if the solar demand just in China continues to grow the way it's been growing, it'll consume over 2/3 of the silver that we produce every year, whereas it's consuming about 25% of it right now. So, it's one commodity that's not below its two all-time highs. It was high in 1980 at $50 when the Hunt brothers tried to corner it. They changed the rules. And it was high again in 2011 in the last silver gold bull market at 50, briefly, very briefly.
Mm-hmm.
And then it fell. And, we're not even at 50 yet. We're in the 37, 8, 9 range. We haven't broken 40. And looking at the charts, doing technical analysis, looking at everything I know, I mean, I'm highly confident silver's going through 50, and then it's going to 70, and then it's going to 100. And I just listened to Gary Savage last night. He thinks it's going to 250 to 500. So, I don't know about that, but but I do know it's going higher, because I think we're in an inflationary world, and I think we're in an inflationary environment. And we can't just, that's the thing that people think, or they say, well, the price of gold and silver go higher. Well, we'll mine more gold and silver. Yes, we will. But from the day you first make a first discovery till the day the metal comes out of the ground is
Mm-hmm.
often, it's never less than 5 years. It's often 10 years, and sometimes it's 15 years. So, it's not like we can just turn on a tap and have more gold, or turn on a tap and have more silver. We've got to invest a lot of capex, and we've got to just invest years. I mean, there's just certain things, it's not like, in 9 1 month periods, you can have a baby. You got to have 1 9 month period to turn it into a gold mine. So, so those things are going to come along, and I think capacity. I mean, supply will go up with these higher prices, no doubt, but it's not going to go up fast because of the delay and the time it takes to build a silver mine or a gold mine. So, but yeah, I mean, to me, Brendan, those are, and I write about these in my letters. I wrote about this in the book. I mean, I think we're in a sovereign debt crisis. I think, and the reason is the way our government's constructed. They're paid to buy votes, and so they don't think there's any cost to buying votes, and of course there is a cost, and that's inflation, and we all pay it at the grocery store. But until that system in some way changes, they are going to continue to spend more than they have, which is effectively diluting the beer to buy votes. And so, with that being the case, it's now become pretty obvious because you've got kind of the two of the three forms of sound money, gold, silver, Bitcoin, are at all-time highs. I mean, gold's at an all-time high, very close, 3350, 3500 is high, or 3450 was high, and Bitcoin at 120 or 121, it's 123 was a high. I mean, those are bumping up right against their highs. There's a message there, and by the way, the long bond, the 20 and the 30-year, U.S. government bonds, they're scraping the bottom of the barrel. I mean, they've lost half their value since 2020. So, because everyone knows that holding a debt instrument for 20 or 30 years when you're going to print a lot of money, you're not going to get back real value. So that to me all says sovereign debt crisis. And I watch the tea leaves on how how they're behaving in the government. And I've often said to my potential investors, I say, well, look, what could ruin the thesis of investing with me, investing in our funds, if the government got really responsible, balance the budget, right? And they all laugh, and I laugh too. You laugh, right? Because it's kind of ridiculous to think it. I mean, it's not impossible, but it seems like a long shot, right?
The trend isn't good. Yeah.
Yeah. I mean, the odds aren't good. And so with that, I mean, here's a perfect example. I mean, the big, beautiful bill, right? I mean, it just passed, I mean, and I was amazed. I mean, what happened to the Freedom Caucus? All these guys were going to, they all, Trump steamrolled them. They all rolled over. I mean, there were literally only two guys who protested vehemently against this: Rand Paul and Thomas Massie. And of course, Trump took them to the woodshed and talked about what criminals they were, how bad they were. And so there's no, Washington is it's so broken, right? It just is so broken. So, and that's sad. That's bad news. And you can get upset about it, or you can just say, okay, well, now that I know that fact, I'm going to and now that my groceries are going up a lot, which really sucks for all of us. Every time I go to the grocery store, I get mad. Fine. I don't want to be a sucker in this game. I'm going to adjust my spending habits to make sure I save in things, and in Bitcoin terms or in gold terms, my groceries are going down in cost because I pay a little more for groceries every year, but I make it up in the gains I've had in my gold and gold stocks and Bitcoin, like more than make it up. So that, you got to kind of balance one against the other.
Yeah. I just think we're in such an incredibly interesting time. It's just like we've talked about before. I mean, the fourth turning, these monetary transitions, we're in it. It's always hard to see when you're not, unless someone like waves a flag or there's a breaking news on a news channel, like, hey, we're having a monetary transition. Like a lot of these things just happen, they just happen day by day. And then you look back and like, oh, wow, this thing happened.
Well, it almost makes you kind of wonder, why doesn't somebody write a book about this shit, right?
Yeah. It was a perfect segue. I was just going to bring up your books. That's why I was, your book, The Big Print. It's a beautiful segue because this is, we've talked about it, about throughout. You talked about so many of these things that we've talked about just over time in your book. And the print that's coming, I would love for you, just in terms of the big print and just papering over things and covering over things in it, not even just in the next 6 months or next year, but even the next 10 years. I mean, I know Harry Dent has talked about this for 15 years, the demographic cliff and just the silent generation really, really sunsetting and in the older boomer generation sunsetting, and they're leaving the market. I mean, what does it look like in the coming years here, them having to paper over this system so deflation doesn't happen, this wealth transfer? I mean, we're in some incredible times. I just don't think the average, even a Bitcoiner doesn't even understand. It's wild.
Yeah, it's hard to, it's really hard to know what all the policy responses are going to be in advance. It's impossible to know, but we can kind of look at the tea leaves, look at the clues. I mean, one thing is right now, Social Security and Medicare are untouchable because the boomer voting block is an enormous block and it determines elections. Well, boomers will start dying, and 10 or 20 years from now, the boomer voting block won't be as big, and so you'll be able to touch those things, I suspect. So that's one change. I think another change is, right now we got red team in control, and in my view, red team is infinitely better than blue team, even though they both kind of suck in certain ways.
Yeah.
But in a fourth turning, the
Yep.
pattern is that, life is hard, and I think it is hard for a lot of people right now. It's sad. That's why I wrote the book. But and when life is hard and you don't know why and you're angry, you vote the bums out. So I hope this doesn't happen, but I could see a scenario where the Trump term ends, inflation is pretty high. Some things have been solved, but not enough. The Democrats promise a lot of goodies, and Team Blue wins in 4 years. And
Mm-hmm.
I mean, what would they try? Universal basic income. I mean, Andrew Yang has talked about that. AOC has talked about that. I mean, look, even Trump. I mean, here's an amazing thing, right? So we're running these enormous deficits, and one of the nice offsets to the deficits I talked about in some other pods, I think it's a really positive thing, is these tariffs have actually increased government revenue substantially. I mean, we're getting between 100 and 200 billion dollars a year in tariff revenue that we did not get. So that helps to reduce the deficit. What does Trump do? He turns around and says, well, maybe we should issue tariff dividend checks. Well, I'm like, dude, with what? I mean, you know, I mean, you're running an enormous deficit. You're talking, but again, it's buying votes. It's stimmies, right? I mean, and so COVID opened up a whole new can of worms where, not only when times get tough, not only does the government maybe cut interest rates to zero, help the banks out, backstop them all, Fed comes in with a lot of money printing, but also they think, okay, who's hurting? Let's send them some money. Well, that's money they don't have. And what they're doing, obviously, is they're hurting everybody who has money because they're diluting the value. And that's why all our grocery costs have gone up. So, I think, if Team Blue were to win, I mean, taxes are higher. Universal basic income comes in. More transfer payments, means test Social Security. I mean, don't get me wrong. Some of these things probably should be done. I mean, when Social, I mean, it's sad and ironic some of the things that happen, right? Remember when Social Security was set up, the average age for men dying in the United States was in their 60s, right? I mean, we didn't have everybody living to 70, 80, 90. We didn't have all these expensive medical procedures. I mean, you got near end of life and things started going wrong. There wasn't a lot you could spend on, but now, of course, they can spend thousands or millions trying to keep you alive, and they do. And so,
yeah,
so I mean, it's made it. It's just it's all tipped upside down. And of course, the whole medical establishment's broken, and I mean that's a whole different rabbit hole that Dr. Cruz and so many others have gone down. We don't need to go there. But the point is that it's all really, really upside down. And if you ask me how it's going to unfold, I think what's going to happen here in this decade is inflation is going to continue to grow. It's going to become a persistent problem and get worse. People are going to realize it's getting worse, and we're going to start to see a real groundswell movement for sound money as everybody just says, God damn it, this inflation is eating me alive. I can't take it anymore. And so you're going to see politicians who are sound money politicians actually start to gain some traction. The Ron Pauls, the Thomas Masseys, the Rand Pauls, etc. Maybe some Bitcoiners eventually, and Cynthia Loomis, etc. And that will be a good thing. And I don't know. I mean, and maybe, I mean, who knows? I talked about it in the book because there's a chapter 22 of the book talks about policy responses. I mean, if a really forward-thinking president would say, "Hey, look, guys, we followed the wrong model. Keynes was an idiot. We can't spend our way into prosperity. We need to balance the budget and reset the debt. And we're going to do it in the following manner." And I lay it out how you do it in the book. And so, that's what a forward-thinking politician would do. The problem is politicians generally aren't forward-thinking, and they generally don't do stuff like that unless there's a crisis or they're forced to do it. So, my sense is that, the inflation is going to continue. The dollar is going to continue to lose value. It's going to get really acute and more painful, sadly. And when eventually at some point, the outcry will be so damn large. I mean, look, the boomers, by hanging on to their retirement incomes and all that stuff, okay, you got the votes, you can hang on to your retirement incomes, but how's the market going to square that circle? It's not going to buy as much, Yeah, you're going to get your Social Security check, but we're going to have such massive inflation that you're not really going to be happy with it. So we didn't actually cut Social Security because you voted against that. You didn't want that. But we really did cut Social Security because by running these policies, we inflated the shit out of everything, and everything you need to buy costs you twice as much. So you kind of got a real Social Security cut through the back door. but that, to me, again, that's dishonest. I mean, what we should do is everything should be through the front door, and we should have sound money. So, and that's what the book is all about.
It feels like we're in a time, Larry, where no one can handle the truth. No, it's the few good men. You can't handle the truth. I mean, no one can handle the truth. There's no accountability. There's no responsibility. Everyone's got a free lunch. How dare you cut? I mean, it used to be generations, they looked out for the generations behind them, and it was like, hey, I want to leave it better off for our grandchildren or whatever. And now it's like, nope, every man out for himself.
There were some relief programs.
Wild.
I think at some point in time, one of my grandparents, they said, they could have theoretically said, well, we can get a little bit of relief here or that for the government. They were ashamed to do it. They were like, no, I would never do that. I'm too proud to ask for help,
Mm-hmm.
But that's long gone. I mean, now it's like, oh yeah, I got a student loan, just forgive it, please. It's just, but there's so many layers of this brokenness. I mean, one of the other ones that's talked about in the book that just angers me enormously is that the usury laws got taken away. I mean, so why do the banks get to borrow money at the Fed funds rate or lower, but you and I have to pay 25% on our credit cards? I mean, come on, that's just ridiculous. Yep. The only thing we can borrow at a semi-reasonable rate against are our homes, and that's just not right. I mean, so there are many, many layers to this financialization, and it's infected so many things. We didn't go down the healthcare rabbit hole. We probably shouldn't, but it's infected all of that. I mean, 90% of the country is unhealthy, which then adds to the healthcare cost, which then adds to the Medicare. I mean, it's all a vicious circle. I mean, we got the whole country doing CrossFit. We could cut our medical expenses by 30% overnight, because we'd have less obesity, less diabetes, less everything. So, but sadly, that's not going to happen. That doesn't, that's just not the way the place
no one.
runs.
And it's something you've talked about for years, again, in advocating sound money for decades. And it's the incentives of fiat broken currencies incentivize politicians or people to vote in more free things and at the behest of other people. That's all it is, right? It breaks all the systems,
So and that's what Ben Franklin said. It's a republic if you can keep it. And somebody else, I don't know if it was Franklin or somebody else, made the statement that, these democracies, that are republic, it's really a republic, but we've kind of devolved into a democracy. They work until majority of the people realize they can vote themselves free benefits, and so they become the wolves, and everyone who's got capital and savings become the sheep, and they want to eat you. I mean, that's the other thing. I mean, I feel like Bitcoiners and the rest of us investors, we gotta do really well in this 4-year period, because cap gains are still only 23%. I mean, there've been times in this country, Brennan. My dad lived through them, and I mean, there were times when the peak capital gains rate was like 70%, peak tax rate. I mean, if you don't think that the other side wants to come after that, because they think it's all terribly unfair, and it's tricky because it is somewhat unfair. I mean, the cotillionaires have had an unfair deal because they could borrow cheaply, but that doesn't mean that taxing them is the solution. I mean, a government tax is a net negative on the economy, full stop, because the government doesn't do anything, doesn't produce anything of value. All they do is they write regulations, they slow all of us down. So, but again, I mean, this new generation, they're pissed off, they're community minded, they're smart, they get it. I mean, guys like Jack Mullers are leading them. They all understand Bitcoin, they all understand how broken the system is. I mean, we're going to get there. We're just going to, I'm very optimistic and positive about where we go and where we get there. And I think it all, people said, what's your timeline, Larry? I think we'll see really serious changes and fixes, in the 2030 to 2035 timeframe. So within the next 10 years. So kind of, 5 years out to 10 years out. I don't see how the current system, fiat, debt, the government, I don't see how it makes it another 10 years. I just don't. It's broken now. It's obvious to so many people. It becomes obvious to more people every day. And all it takes are skyrocketing gold and Bitcoin prices. I mean, my book talked about this. I mean, so fiat is the fire. You're in the theater and there's a fire and there's smoke and it's fiat burning, and a few people like us have kind of said, "Oh, I'm out of here." We hit the exits, and I mean, and just more people are going to smell the smoke and say, "I'm fucking out of here too." And when it becomes really obvious that the fire is raging, everybody's saying, "We're all out of here." And this is I mean, this is what happened. This is what happened in Venezuela. This is what happened in Weimar Germany. This is what happened in Zimbabwe. I mean, and people think, well, that could never happen in America. Well, really? pursue the exact same policies, take them to their logical extreme, make Stephanie Kelton the Treasury Secretary in a blue administration where, there are plenty of Democrats who said deficits don't matter. We've got a printing press, we can print whatever we need. Well, you really start to act on that, you're going to see your currency fail. Just full stop. It's going to happen. It doesn't matter if you're the reserve currency. It doesn't matter if you have the biggest military. It doesn't matter what. If you do that, your currency will fail. And, that won't be pleasant. But, I think there are a lot of great people in this country. And hopefully they'll realize why it failed and how it failed. And nobody would try and rebuild a system using the same model we used in the last system. They go, we got to fix it. And therefore, this is the new currency. And it's Satoshi. That's kind of where I see us going.
I could not agree more, Larry. And I think that it marries up perfectly with, and I think it's a 10-year stretch about as well, kind of like what you just laid out. I think it's because it marries up perfectly with this demographic cliff and this demographic shift.
Yeah. To be fair, Brennan, it probably is going to be longer. If only because if you were outside trying to figure this out and handicapping it, you should probably think it's longer, because I always think things are going to happen faster than they happen. 2000, to give you an example, in 2008, I thought it was all over for the financial system. I thought, this is it. Yeah. Great. Finally, we're going to fix it. I know you've talked about it many times. Yep. They fucking kicked the can for another goddamn, 15 years. 15 years. Maybe it'll be 2020, maybe it'll be 20. I don't know. But I do know, and some of when it is, it's very important to understand this. When it is goes to the policy moves. They could make it happen tomorrow if they go down the wrong policy path, but, it's going to take longer if we have this back and forth and back and forth. Look, if red team wins in 4 years, well, then we'll probably hold the system together. And, maybe it'll be more gradual transition into sounder money, and people will still spend in dollars. There will be a bond market, not a big one, but, and people will save in Satoshis and gold. I don't know.
I couldn't agree more. Another thing you talked about in your book a lot, which I think is super important to talk about, is just the rate of debasement that, the yearly or the annual debasement rate, call it, a 6 to 10%, like you mentioned in your book. Right. And you see so many people, whether it's like Dave Ramsey or Warren Buffett, have said, just sit back, you get an index fund and you make about 8 to 10% a year. And you see people like Tad Smith, who's just become a Bitcoiner in the last few years, was the CEO of Sotheby's. And there's many other people out there as well who they've kind of come to this realization, as many of us have, of wait, this is all one trade. It's all going the same direction, right? Like it's all going sideways against the debasement.
Being in the S&P and having the S&P go up 7%, having your purchasing power raised by 7%, you're treading water. Now it's better than sitting in cash, right?
Right.
And in many cases, it's better than bonds. Depends on what the bond interest rates are, but. Yeah, it's I think it's a problem, and it's funny too, because if you kind of look back, there are periods where inflation wasn't in the headlines, and yet the inflation was still taking place. Saylor says it. I agree with him. Other smart monetary people say it. The best measure of the rate of inflation is the growth of the underlying M2, the broad money supply, and I think from 71 to present, that average growth rate is like 7.8%. And so sometimes inflation, reported inflation, well, that's something the government tells you and they lie about it and they make it up. But sometimes reported inflation is less, sometimes it's more. But, if you average it out over long periods of time, if you're not growing your wealth and your assets by 7% a year, you're losing power. You're losing purchasing power. And ironically, gold that's about the same return on gold over that same period of time. So you didn't get rich holding gold, but you also didn't get poor holding gold. In gold terms, you held your own. Silver actually the same. It's pretty interesting. I remember when I was a kid, gasoline was 25 cents. A quarter of a silver dollar. 1 quarter used to be a quarter of an ounce of silver, and so back then, 1 quarter would buy you a gallon of gasoline. Well, today, 1 ounce of silver is 38. So what's a quarter of that? It actually buys you more than an ounce of or a gallon of gasoline today, still to this day, because 38 divided by 4 is higher than today's gas price. So, these things that the government can't print have held their value. And real estate falls in that bucket too. Let's talk about in the book, the negative on real estate is just all the taxes and the switching costs and the illiquidity of it all. And do you really want to, it begs the question: do you really want to own real estate in a country that's going the wrong way? I mean, I don't know. I mean,
That's the unspoken thing, Larry.
yeah,
Yeah. Just business. It's hard on business owners or real
all of
estate.
it,
If you're renting it out, you're dealing
all of it.
with people who we talked about no accountability, no responsibility. Do I want to serve people a product and service where the consumer is just kind of AWOL? Like that's insanity. I mean, it's like,
Yeah, it
that's
is.
wild.
It is. Look, I mean, it is a very interesting period of time. It'll be studied for years. I think another thing we should talk about is just, I think the shock factor of the wealth transfer here is really going to be stunning. I mean, I think
Mm-hmm.
if you're on the right side of this trade, which is to say, if you have sound things, your family in 10 or 20 years is going to be enormously benefited by that. And if you're on the wrong side of this trade, if you have a bond portfolio, you're going to get poor, in the next 10 or 20 years, just massively, because I think we're headed into a very inflationary period, and you can't protect yourself by hanging out in bonds. It's just not a safe place to be.
Yeah, I could not agree more. I want to transition to some of the Treasury companies, what's happening there, and Sailor. I want to get your thoughts and unpack that a little bit.
Yeah, that's great. That's a good area to go into. So a lot of people have called these Ponzi schemes, and I can't wait. I just saw that Lynn and Andy Cozen just had a pod where they kind of debated whether Cozen thinks these things are Ponzi schemes. I don't.
Mm-hmm.
So let's just define them. So a treasury company is a company either with an operating business or no operating business, whatever, but it is a company whose business, they make it their business to raise capital and purchase Bitcoin. So the underlying value, the biggest part of the underlying value of most of these companies is the Bitcoin that they hold. I mean, some of them have operating business. Semler does. Sailor does too, but the operating business is trivial now compared to the size of the Bitcoin he owns. So in theory, if you had a publicly traded vehicle that owned a Bitcoin, it should trade at the value of the Bitcoin or slightly above or slightly below, either a premium or a discount. All else being equal. However, what they've done and what they're able to do, and what Saylor really has pioneered, is the notion that when you have an operating company or when you have a company with a Bitcoin that owns Bitcoin, you can actually borrow against that Bitcoin. You can use some leverage and either sell debt or sell convertible debt or sell preferred stock. And as he recently said in his earnings call, I think he thinks with the preferred stock he's found his iPhone moment, which is to say he found the killer thing that everyone's going to want. And you can go out and you can issue a security to the marketplace that basically raises capital, and you use that capital to buy more Bitcoin. And in the case of the preferred, let's take a vanilla one and just round the numbers up. He'll sell a straight preferred stock. It's secured by all the Bitcoin on the balance sheet. It's ahead of the common in any kind of a liquidation event. And it pays a 10% dividend. Now, he doesn't have the cash to pay the dividend, but he can either sell more preferred or sell common in order to pay the dividend. And, what he's betting is that the Bitcoin that he buys will go up more than 10% a year, which if you look historically and you look going forward, that's a relatively safe bet. And so what you've done with a treasury company, most of your treasury companies, what they're doing is they're leveraging Bitcoin. And so because of that leverage, their performance will track Bitcoin because they have it on their balance sheet. But the leverage means that they will exceed Bitcoin's return because they own more Bitcoin, and they're using it's what Harold Stennis, or I think it was Harold Hugo Stennis, a guy in the Weimar Germany did. He borrowed money in Weimar Deutschmarks, and he used it to buy stuff. And then when the Deutschmark became worthless, he had plenty of money to pay back the lenders, and he owned all the stuff. And so what these companies are really doing, that's how simple it is. What these companies are doing is they're borrowing money in some form, debt, convertible debt, preferred, and the preferred never has to be paid back, by the way, it's perpetual, but and they're using it to buy an asset that they think will go up faster and more quickly than in value than whatever the cost of that capital is. And as long as they don't go too far overboard, get too much debt, and get too out there, this will work. And as long as the return on Bitcoin exceeds whatever that capital cost is, they will be, quote unquote, adding value to their shareholders. Now, it gets a little trickier because they're inventing all these new metrics on how to look at these things. They have something called MNAV, which is the multiple of the NAV. So in any one of these companies, you can look at all the you look at the market, common stock price, the debt, and the preferred, add it all together, and that's the market value of the company. And then you compare that to the underlying Bitcoin. And of course, they all sell at a premium to the underlying Bitcoin because people think that they will continue to execute this strategy, and the return will be higher than just owning Bitcoin. So it should be at a premium. The question is how much premium? And, if they're small, growing really rapidly, we've seen a couple of them come out and the premiums have gotten to MNAVs of 4, 7, 8, 10, 12, 15. I mean, crazy numbers, but pretty much because they're just getting started and they can add a lot of Bitcoin. And in turn, the flywheel here is that if you have an MNAV of 12 or 10 or 5 or even 4, you can sell new common stock into the market, use the proceeds of that sale to buy Bitcoin, and you've actually increased your Bitcoin per share. So it's anti-dilutive. And so people are saying because of that anti-dilutive quality, we should encourage people, these companies, to sell common stock or other forms of, securities into the market and buy Bitcoin. And so, they're right. I mean, it does make sense. In a bear market where, Bitcoin goes down and maybe these MNAVs collapse, they won't be able to grow. They'll have to stop that. And arguably, if they have preferred dividends and they can't sell common, they can't sell more preferred, they'll have to sell some Bitcoin just to pay the dividends. But I think what they're betting is that, and what they've said is that they think that the leverage, as long as they keep the leverage, in what they call intelligent leverage, which is 10, 20, 30%, never more. And as long as they build their models where they stress test them so that if Bitcoin were to have one of these big corrections, down 50, 60%, they would still be covered and able to make all their commitments. That this is a strategy which will produce a higher rate of return than just owning Bitcoin. But, like everything else, you add leverage, you add volatility. So, they're going to go up faster. They're going to go down faster too. So, but I'm in favor of it because it's another demand for Bitcoin. And what they're doing, I mean, and Saylor points this out, this is his iPhone moment. It's kind of brilliant. I mean, your average boomer, for example, has a lot of money saved. And they're out there looking for a return. And, frankly, it's pretty hard to get a 10% return with a low level of risk today. I mean, there aren't a lot of stocks paying a 10% dividend. They're just, getting 10% is hard, right? And yet, he'll sell you a preferred stock that yields 10% perpetually, forever on your cost basis. And, he'll take the proceeds and put them in Bitcoin. And the way he's getting the 10% is he's thinking the Bitcoin is going up more than 10%, and so he's willing to do it. And so you, Mr. Boomer, don't realize it, but you've just supported Bitcoin, even though all you really wanted was a 10% rate of return safely, and you've gotten it. And so what that's doing is it's just sucking capital out of all these, out of all the rest of the market, right? And as you and I both know, I mean, this is one of the things that makes me, when people say, well, we're too early here, or, we're too late here, I say, no, you're not. There's $900 trillion of wealth, fiat wealth. That's including real estate. So take real estate away. Call it $450 trillion of fiat wealth out there. Stocks, bonds, cash, securities, right? Bitcoin's total market cap today is $2 trillion, a little over it now. Well, 2 over 450, it's still a pretty small percentage. And so more and more of that 450 is in, and when that 450 realizes that this is something that can't be diluted, and this is something that's going up forever, Laura, they're going to migrate and say, well, yeah, maybe I shouldn't hold these bonds. Maybe I should hold this Bitcoin. Or, maybe it's not I sell my bonds, but maybe I buy this strike preferred and get a 10% yield. That's interesting. And people say, well, that's risky. You're betting on Bitcoin. No, you're not. You're at the top of the capital structure, and that preferred is covered, like 10x. I mean, the top one, and I don't think it yields 10% now. It yields less, but you've got a lot of Bitcoin underneath it. And so that Bitcoin, even if that Bitcoin collapsed in value by 70%, it would still be a big number relative to your preferred. And that preferred gets the first dollar out of that company. So, that's pretty low risk, right? And so, it's kind of a genius move. And, some have called it, and I agree with this, some have called it a speculative attack on fiat currency. And it really kind of is, in a backdoor sort of way. And it's amazing to me. I mean, I went to Harvard Business School, and they just did a case. They did a case on it. I saw it on Twitter. Somebody was talking about it. And all the people were criticizing me. So, I mean, do you realize this guy has taken this company from like a $3 billion market cap to $100 billion market cap in like 5 years. I mean, nobody in the history has ever done that. It's stunning what's going on here. And people aren't paying attention to it. And I'm like, I got this thing, I got my IRA loaded up with this thing, right? It's like, no, because I mean, seriously, this is going to be one of the most valuable companies in the world. I mean, Saylor's going to be the richest man in the world, in my opinion, and not that far out. I mean, probably 5 years out, maybe 10 years out. So it's really quite an amazing thing. Now, below Saylor, there are all these other guys, and we own some in the fund. I'm involved with the Bitcoin Opportunity Fund, and I'm a big fan of a lot of them, but not every one of them is going to make it. I mean, there will be some guys who will get too leveraged. There's some guys who won't do it as well. I mean, in my view, Saylor and his organization, they are really they're really pros, and they're the biggest and the best. And so to me, it's an easy call to own a lot of that. I think the others might outperform him for brief periods of time as they're growing and, when they're getting adoption and so forth. But they're all untested. And I mean, he's been doing this for 5 years, and, he rode out a bear market, and this guy gets it. So to me, MicroStrategy really stands head and shoulders above the alternatives.
Yeah, and it's funny, you kind of just alluded to what my follow-up question was going to be, which is this kind of, are the Bitcoin treasury companies kind of the altcoins of this cycle almost, where you have got Mahler's of 21, Metaplanet, and Dylan and Semler. I think those are solid, right? But there's a lot of copycats. So are there going to be blowups? Eventually, people are trying to get this alpha.
I would call them altcoins because all the altcoins are fraudulent and shit coins and bullshit.
Right.
I mean, I think they're all running.
I meant more the rush.
They're all running
to
a Saylor playbook.
Yep.
I think some of them, just like any, there's a little bit of a mania around it. I think some of them got a little bit ahead of themselves. My personal view is you don't really want to be buying these things when the multiple of MNAV is over 3. I think in the longer term, the market will settle into a premium over MNAV of between 1.5 and 3.0. Now, maybe if they're growing, I mean, so Adam Back had a formula that said, look, if they've got a higher premium and they can add Bitcoin quickly, and that Bitcoin's a big percentage of what they've already got, then they've got, it's kind of like a peg ratio. Then you can justify playing a higher MNAV. And I don't dispute that, but, as a value investor, I'm always, so what you're doing is you're saying, well, there's going to be enough growth here that I can justify paying a higher MNAV. And, maybe you can. But I suggested, will they be able to pull off the growth? I mean, I would suggest people should be careful. I mean, I'll give you a good example of something I saw, and I love Dylan, I love Metaplanet, we own it. But I saw some kid on Twitter, and these things are going to provide a higher return than Bitcoin, the well-managed ones. Okay, don't get me wrong. Mm. But by the way, Bitcoin's going to really do great. I mean, the ARR right now is in the 40% range. I mean, 40% compounded over a bunch of years. Holy shit, that's incredible. So why get greedy? But some kid on Twitter came up and said, I just sold all my Bitcoin and I'm using it to buy Metaplanet. And I was kind of like, dude, that's not how you do it. Yeah, right. You're missing the plot. I mean, that might work. It might not work though. You know what I mean? And I think this was back when Metaplanet was right at, it had really run up hard. And I mean, my guess is now versus, I mean, this was a couple months ago, I guess, versus that trade, my bet is he's now down. Now, look, if Dylan continues to do well and they go on, they buy more, he'll probably be fine. But these things are riskier. They are more volatile. We don't know exactly how each one will behave in a bear market. So, I still, with my clients and the people I talk to about Bitcoin, I still highly recommend that a vast majority of their sound money allocation be just to straight coins and self-custody. And if you want to gamble with these things, play around with them, have at it. I mean, some of them are going to work really nicely. Probably a few of them won't work, is my guess.
Yeah, and that's where, and I should have clarified what I was trying to say earlier too, where you have a lot of the objections you get as a Bitcoiner are from altcoiners or other people that might be in the crypto space, but they're XRP's outperformed in the last 6 months of Bitcoin. What do you say about that, or Ethereum? And it's like, guys, you're missing that plot.
10 years. Yeah, right.
Exactly. It's like, and that's where people get caught up in like, well, Metaplanet's going to outperform. It's like, well, yeah, it could on a month basis or a 6 month, but like you're missing the money, the sound money.
One of the things where I get crosswise with a lot of people on Twitter is I really think in 3, 5, and 10 year timeframes. I don't like to trade at all. I just like to buy stuff, set it, and forget it. You know what I mean? And
The
so,
average guy shouldn't have to. Right. That's the whole
yeah,
point of Bitcoin,
right. I
right?
mean,
Like the
right. I
average
mean,
guy should not have to.
well,
Yeah.
that's a really good point. That's a really good point. I mean, what this whole fiat world has done is it's forced everybody to not only become a wage slave and try and make money,
Mm-hmm.
but then to try and on the daytime, on the side job, to try and figure out how to invest and buy and trade and this and that, because it's melting so damn
Right.
fast,
It's
right?
insanity.
And it's horrible. Yeah, it is
Mm-hmm.
insane, and it's horrible and it's unfair. And so, I mean, one of the greatest things about Bitcoin is the way it kind of frees you. I mean, you can be an artist, you can be,
Yes.
a teacher, you can be whatever you want to be. If you get this one thing right, you take your savings, you put it there, you sit back, you set it and forget it. You're going to wake up in 5 years or 10 years, you're going to find out you got multiples of your money. And that's,
Yeah.
I mean, Bitcoin, I mean, it's the best performing financial asset in the history of the world, the last 15 or 16 years. The fact that most financial advisors don't recognize that, focus on it, understand why that's true and why it's likely to continue, it's just criminal. It's just absolutely criminal. And so, but it's hard, Brendan. I mean, to be fair, in most investing, generally speaking, when something goes up a lot, it often does become overvalued. I mean, that's a tautology that's not unrealistic historically.
Mm-hmm.
But because suddenly we've got an asset with a fixed supply, that rule has gotten thrown out the window. That's an investing rule that held through many, many decades, cycles, millennia almost, and yet we've now got something with a fixed supply, and so it's a different animal, and a different set of rules apply. Do you know what I mean? And so
Absolutely.
and that's what's really hard for people to get their arms around. I mean, on the is it too expensive thing, I also like to use the Titanic analogy. So I
Yeah.
say, all right. The financial system and the dollar and fiat money is the Titanic, right? It's sinking, right now slowly but consistently. And Bitcoin and gold are the lifeboats. They're not going to sink. They're going to be here. They're going to be money. They're going to have value in the future. All right. So, I bought a seat in the lifeboat for 300, and I bought some more at 1,000. I bought some at 10,000. I bought it, and I bought it at
Yep.
60,000. I bought all the way along. And I get it. You're angry that you didn't do that, and I did it, and so on and so forth. Okay, fine. But seat in the lifeboat now costs $120,000. Okay, but you're on the Titanic. The lifeboat's 120, or in gold, it's $3,400. You know,
Mm-hmm.
Bid to you. What do you want to do? Stay in the Titanic? I want to buy the fucking seat. Right? I mean,
It's binary. It's
yeah,
binary.
it's just not that
Yeah.
hard. Now you got to accept my notion that fiat's a Titanic. But if you read my book, I think you might come to you might say that's not so far fetched. I mean, it's not, and it may not be the Titanic. I mean, maybe it's going to limp into port, with a lot of water on board. I don't know, but arguably it's fiat's not in good shape, right? So
Right. That's incredible. Yeah. Before we get to kind of price and talking some of that, just your thoughts on gold and silver and Bitcoin in the coming in the cycle in the coming years here. I want you to actually we talked about the reserve being a reserve asset and just kind of this transition we're going through. But I would love just your thoughts on the strategic reserve for America and what that could look like. And again, just your thoughts on, because again, I get people pushing back all the time on, we don't need a Bitcoin bill because the government, shouldn't be in government. And, so we briefly touched on this, but at the same time, getting the Trojan horse inside the gates, like how do you, in your mind, how do you square that circle? Like what, should we be getting this audit? Do we need to keep increasing, the Bitcoin that the government has? Like, when you zoom out, like how do you see all of this?
I don't know. I mean, I'm a libertarian, and I don't like big government. And there's a part of me that doesn't want the government to own any Bitcoin because I want to see the government
Yeah,
totally fail. But
same.
as I said earlier, I mean, I do like our government more than I like the Chinese one and the Russian one. And so, I'm very split on this. I'm of two minds. I mean, and also, seeing the government buy it will push us towards. I mean, probably more than anything else. That I wrote the book for a lot of reasons. But one of the reasons is, I want to see this happen sooner rather than later because you got more runway than I do. You're much younger than I am,
Yeah.
and so I want to see, this new system that's so beautiful. I want to see it all created in my lifetime, which I think it will be. But sooner is better than later, right? Because the system's broken, a lot of people are hurting. So for that reason, I guess I'd say it'd be great if the government would endorse it, buy more of it, just push it into the consciousness. But on the giving the government more power, I don't know. Government's pretty much abused most of the power it has. So I get the libertarian argument for against. So like I say, I'm kind of two minds on that one. You know.
Yeah. And it does. I mean, I'm a believer, like I said, I'm the same page with you, but politics is downstream of culture at the end of the day, and that's why I
Yeah.
think, like you said, getting people, whether we like it or not, there's a lot of people that trust government and governmental figures,
Absolutely.
public figures, right? So
Absolutely.
the more they say it, the better, the more it's on their lips. I would have to believe the better it is for the lexicon of the average public
I
where
think
they
that's right.
are hearing
Yeah.
it,
Oh
right?
no, I don't think there's any
I,
doubt that if we have a strategic Bitcoin reserve and if we have a president who talks positive, I mean, it's all positive and pushes us in the direction of this transition, which you and I so badly want to happen.
yeah,
So for
yeah,
that reason, I
and more
probably
people
lean
learning about
towards,
it.
yeah, letting him do it. But yeah,
We,
I don't
I feel
like
like
government
we've
power.
I know I can't stand it either. At the end of the day, it's like you have to lean on, if we truly believe, and again, in my opinion, like if we believe that Bitcoin changes you, like it has all of us, and that's going to continue on down the line, then no matter who gets it, we then therefore have to believe that it would start changing that person as well over time. And government is a collection of human beings.
I
All
think that's right.
corporations are collections of
I see
humans,
your
right?
point.
So
I see your point, and I accept that.
yeah, I mean,
I think that's right.
it's tough.
It could
Yeah,
be a good
I go
thing.
back and forth. Yeah.
It could be a good
All
thing.
right. I want to land the plane with a few questions on price and just
Yeah.
you're thinking of, we touched on kind of a little bit of all these things. I want to kind of like bring it all together and like, a little bit of like the super cycle. Like, do you
Yeah.
see there being, like you mentioned, like maybe being a 5.5 year cycle? I know Dr. Jeff, he came on my pod a few months ago, then he was on Danny's, and he's kind of said every like couple months, he's kind of said, maybe this goes into 2026 a few months. Looks like it might be. So where do you see the cycle theory playing out? Like, when
Yeah.
you zoom out again, how
Well,
do you see it?
yeah. I don't think we're going to hear necessarily to what we've had in the past, because so many things have happened with the ETF and the broader acceptance and
Mm-hmm.
everything else. I think we have to consider that the rules are slowly but surely changing, and that will affect the cycles. I mean, in my mind, I look at the Meyer multiple a lot, which is just the price of Bitcoin compared to the 200-day moving average. And you can see it on Twitter. There's a Meyer multiple website account which shows you every day what it's at. And the moving average right now, I think, is around 98, 99, maybe 100,000. And so, Bitcoin has spent very, very small amounts of time above the 2x that moving average. So under that moving average, it's clearly undervalued. Sometimes it's been deeply under that moving average, way undervalued. Like it was 15,000, it was insanely undervalued.
Mm-hmm.
So I kind of see the cycle taking us to at least 200, and I kind of see that probably next year sometime. I think it's entirely, and there's some outliers. If you go back to prior cycles, you can see that sometimes it went to 3 or 4x the moving average. So if you told me that it went to 400 in the cycle, I wouldn't be surprised. I mean, I think 500, probably unlikely. I think Samson's million, no, I don't think so. But the model I'm kind of operating under, Brandon, is that sometime in the next year, 2026, we see 200, maybe higher, maybe 220, maybe 300. I don't know. And then I guess I think the cycles still do occur, and I think they just occur because of normal human fear and greed. And what'll happen, what will drive the last push of that cycle will be a lot of people diving on board, a lot of um, rah rah cheerleading, a lot of people starting to use leverage. And this is one of the things I worry about with the book and everything else. Everyone will finally, as this thing starts to work, everyone says, "Oh, you got to read this book." They'll read the book. It'll be at 250 going to 300. They'll jump in, you know, and then it'll correct from 300 back to 175. Which, by the way, 175 will be really good, but
Right.
but that's kind of what it does. You know what I mean? And
Mm-hmm.
that'll just be because some of the people were over levered and they couldn't really hang on to what they had, and it wasn't stable demand, and so on and so forth. So I don't think the cycles are dead. I do think they're attenuating. I mean, originally there was like a 90% drawdown, 80, a couple in the 70s. I think the last one was just over 70. I don't think we'll see another 70% drawdown with all the broad distribution today, but 50%, sure. 40%, absolutely. 50%, probably. 60, maybe. I don't know. But
Mm-hmm.
off of what high, And so,
True.
I kind of look at I kind of use the power law, and the thing that makes it tough to consider. Let's say it goes to 400, and think about maybe selling some there. Is that there'll be one of these where and I said this earlier, the power law will break. Be kind of like holy shit. I mean, so some of it will depend. Does it get to 400 just or 200 just based on the normal cycle, or does the new Fed chairman come in next year, cut rates to zero, do massive QE? We issue dividend checks for for everybody who suffered. You know what I mean? We do.
Yep.
Even Trump goes UBI to try and buy votes. The deficit blows out to $4 trillion. I mean, at that point, we might go through 300 and never look back. And Samson might be right. Do you know what I mean? But I don't. I think you gotta ask yourself. You gotta look at kind of what's going on in terms of policy, what's going on in terms of price, and what are the probabilities and the odds. And I'm very comfortable buying it right here. In fact, I just bought some. But at 250, well, if I got some cash out of my gold stuff, would I immediately dump it into Bitcoin? I'm not sure. I might not. I might wait, thinking that I might see 180 or something. I don't know.
Mm-hmm.
I mean, we'll just have to see. It's a very, very tough thing to call, and you have to understand the nature of the way it trades. And fortunately, having lived through five of these cycles or so, or 3 or 4 of these cycles, I can kind of say I think I get how it trades, but I don't know how to call the tops and the bottoms. You just don't know what they're going to be, right? So
yeah, that's a great point.
Same numbers just for gold and silver, by the way. I mean, I think gold hits 5,000 by the end of next year, probably 4,000 by the end of this year. By next year, I mean 2026. I think silver hits. Silver takes out 50 this year. Probably hits 75 by the end of next year, maybe 100. So yeah, we're gonna enjoy some stuff here. And the thing then is, okay, so we've got this runaway inflation, we've got these assets melting up. I mean, what does the Fed do? What are they going to do? Go raise interest rates?
Mm-hmm.
And try and solve it? But they can't.
Right.
And that's the point. The thing what causes a hyperinflation, okay, when a quorum of the people involved in the market, more than half, usually substantially more than half, come to realize that they can never stop printing money and that the flow of money will continue forever. This is the fire in the theater, i.e. this thing is, smoke is coming up. I got to get the fuck out of here now or I'm going to die.
Mm-hmm.
Okay? When that awareness sinks in with a large body of the populace, and they're going to say, and at that point in time, they're not going to be buying. I mean, and Bitcoin's going to be really expensive, and gold's going to be really expensive, but they're going to be thinking to themselves, I don't care how fucking expensive it is, I got to buy it because maybe they'll buy real estate. But the thing is, I got to get out of this goddamn dollar because it's failing, and the way you'll be able to tell that is the slope of the curve will go almost vertical. Yeah. And in the 79, I mean, I remember my grandfather thought the dollar was going to fail in the 70s, and he was a gold investor, and gold went from 200, well, it started at 35 that decade, but it went from 74.5, it went from 250 to 800. It went parabolic. Now, but back then they had a tool. They had the interest rate tool of take interest rates to 20% and have Volcker say, we are not going to let money supply grow anymore. And suddenly all the people realize, holy shit, I'm on the wrong side of this. They're going to get this under control. But in this particular one, who's going to be Volcker? How are they going to get it under control? And so maybe it just keeps going. I don't know. We'll just have to watch. All I know is, I say it in the book, and I really strongly believe this, anyone listening who doesn't own some gold or some Bitcoin, if you don't have 25% of your assets in this shit, you're crazy. Because, if we have the kind of inflation I'm describing and you don't own this stuff, you are going to get hurt. And just 25% will protect you because it's going to go up so much, it's not going to matter. I mean, the other 75 can be worthless. You're still going to be fine. But if you got zero in this stuff, you are nuts. And the thing, it's ironic. I'm a boomer. I know a lot of boomers. They're all quite well to do. They got all their money in stocks, all of it, or bonds. I'm like, what the fuck? You guys are nuts. That's wild. And I try and explain it to them. That's why I wrote the book. It's like, look, guys, read this. Think about this. You're nuts. I mean, okay, say Larry's wrong. Fine. Just put 10% in, right? I mean, zero is just not the right allocation,
Mm-hmm.
So anyway, that's my thought.
It's hard to tell. It's hard for a fish to know he's wet if he's grown up in water his whole life, right?
That's the thing. We've had 40 years of deflation, and We've
Mm-hmm.
got, all these lies. They gaslight the shit out of us. I mean, I listened to Jerome Powell talking about how he's doing what's best for the American people. I want to fucking puke. I mean, it just, I'm serious. I mean, I want to get up there and smack the guy silly. It's like, what the
Oh
fuck? I mean, you're
man.
just lying through your teeth. So, yeah,
Oh, incredible.
that's why I
What
wrote the book.
Yes, that is exactly what is your, so we have, you have like a Peter Dunworth who's like, hey, it's going to be Bitcoin's total addressable market is above and beyond its multiples of the 900 trillion in assets. And you've got a Jeff Booth who says it has to account for all 900 trillion. You've got the Jack Mullers of the world who say it's one half. It's the premium is going to get sucked away, so it's going to be 450 trillion is the addressable market. And then we have many people under that. Where do you stand? 10 years from now, the Sailor Gold Rush, or 20 years from now, or 30 or 50 years from now, like when you zoom out in the very, very macro, what is, in your eyes, what is the addressable market for Bitcoin? What is
Well,
the
50 years,
premium it's going after?
yeah, 50 years from now, it's Bitcoin is money and it's everything.
Mm,
It's 100% of kind of the addressable market, but there'll still be stocks and there'll be some bonds and so forth. I mean, I don't know. I don't really know, Brennan, how to, quantify, what's going to happen, and how much of that we're going to grab, how quickly. But I'll say this. I mean, I feel extremely comfortable predicting that in the early 2030s, if not 2030 itself, we'll be at 1 million. And I think, by 2040, we'll be at 5 or 10 million. And so what? 1 million takes you from 2 trillion to 20. And, from there, the next 10x takes you from 20 to 200. That sounds about right. I mean, out of 450, but the thing that makes all this a little bit difficult is the goddamn fiat number keeps growing so fast too, right? I mean,
mm-hmm,
and it's going
yeah.
to grow more fast as they print more money. So, I mean, you're
Use today's dollars, right?
measuring Bitcoin in
Yeah,
fiat, right? And the
yeah,
fiat, thing keeps growing. I mean, I like to say to friends, well, this is great. I mean, my Bitcoin might be worth $1 million. Okay, fine, but that's a lot worse if gasoline's $1,000 a gallon, right? I mean,
right.
what we don't know is what happens on the fiat side in terms of, fiat versus goods and services. So that's because that's going to, you're going to lose a lot of purchasing power just in that fiat. So it's tricky. I mean, you got a lot of moving pieces here, but I know which side of the bet you want to be on, and you got to be on today. I know that with a very high level of confidence based on my study of monetary history and all the stuff I laid out in the book. So.
Absolutely. The last thing I have for you, which I just thought of, I would love your thought on. Again, I know you've got this objection over time. I get it. I see it in YouTube comments, everything. Like, what happens? Because you just touched on this. It accounts for. We'll take the Jeff Booth route of it's got to account for 900 trillion and all that. It says Bitcoin is money, right? Someday we don't know when that is. 100 years from now, 10 years from now, 50, whatever it is, and Bitcoin's money. It has to account for everything in the world. The average person can't wrap their head around that because they think it's if the dollar is gone, then Bitcoin doesn't exist because that's the pricing mechanism that
Right.
everyone's used to using.
Oh no,
So I would love just your
everything just,
thought when
well,
you
yeah,
see that.
it's pretty straightforward. I mean, everything just reprices in satoshis. I mean, it's just,
Mm,
a sandwich is one satoshi, or, and who knows? I
mm-hmm,
mean, eventually there might be fractions of satoshis. I mean, if a
mm-hmm,
satoshi gets to be worth, $1,000, which, would be an insane Bitcoin valuation, then somebody will create a way. There'll be something that makes sub satoshis. You know what I mean? There'll
mm-hmm,
be a layer 4 that has but yeah, I mean, it's what will happen. What you're describing is what is the numeraire, and right now the numeraire, which is
mm-hmm,
the unit
yeah,
of measure, right now the numeraire is clearly the dollar. I mean, we price pretty much everything in the world in dollar terms. Everybody kind of comes back, and everyone knows what a dollar is. And for many years, it was a very stable way to do it, particularly up until '71. But when that goes away, we know what a satoshi is. We know there are only 21 million of them. There's a lot of stuff in the world. And, each Satoshi will, I think, continue as we get more and more efficient. We're able to produce more stuff more cheaply, more efficiently. And so the purchasing power of every Satoshi will continue to grow. And then, if, like I say, if it gets to the point where a Satoshi is a crazy number, we'll have a layer 4 or layer 3 or layer whatever, where, people say, okay, well, this is a tenth of a Satoshi, or this is a hundredth of a Satoshi. You know what I mean? But at the base layer, you'll have this form of money that cannot be diluted. that is fixed in supply. Right. That's the key.
Yeah. That's it. That's it. It is hard. Like you said, it is tough because it's hard.
Hard to get your head
No one's
around.
ever had to learn it. Yeah, it's exactly. It's intuitive once you see it.
I kind of think that occurring is, I won't be alive to see that. That's probably 40 years out, 50 years out is my guess. I mean, maybe 30 years out. I mean, there'll be a parallel system for quite some time, unless of course unless they really, this goes back to policy. If they do a bunch of stupid policy response shit, they could blow it up sooner. But assuming they don't, this system probably lasts another 20 years, but we'll see. I mean, it's pretty interesting now. I mean, it's, they're about to get a real kick in the teeth. I mean, on this next ramp up, I mean, I'll never forget when it went from, in 2017, when it went from 1,000 to 17,000, or the first time in 2020 when it went from like 5 to 20,000 very, very quickly. And I mean, you just know alarm bells were going off in the central banks. And they're all just sitting there saying, holy shit, what is this thing? What the hell is this thing? Oh my God. And I mean, let's just do a thought experiment. Let's say we break free here and we scored up to 250, 300. I mean, people are going to say, what the fuck's going on? I mean, what the fuck is going on? I mean, is the dollar failing? And meanwhile, gold is going up the same rate. I mean, and suddenly it's going to be an issue. I mean, a lot of people are going to be thinking about this and going, holy crap. That's a real serious move. Now, like I say, it'll get ahead of itself and it'll correct. And, bull markets, what is it? Richard Russell is this great old time newsletter writer I subscribed to for years. Really cool guy. And he say, bull markets like to shake off as many riders as possible. So sure enough, it'll hit 300 and there'll be some newbies will come in. Oh my God, I figured it out. This is fantastic. Look how well this is done. They'll buy it at 300 and right then it'll correct to 200.
What's the old saying, Larry? It's the bull climbs the stairs and the bear goes out the window.
Yeah, like exactly. That's exactly right.
That quote makes me think about
we've got that to look forward to. But I mean, look, my view is even the bottom of that drawdown will, I think right now you're right around the 200-day moving average here. You're starting to get above it. It's not, in my opinion, not even close to being frothy today. I think you're still good to enter it here. But this is just, I mean, and this is all kind of guesswork based on patterns and history and charts and nobody knows for sure, but it's just my best guess. I feel very good about it here. Like I said, at 250, I might slow down my buying, but we'll see.
It is fascinating because I mean, there's we've talked about this obviously just throughout, but there's so much good news, whether it's sovereign wealth funds or countries. There's so many things happening that you just none of it feels like
it could be even higher than it is right now.
Oh my gosh.
Yeah, and I think part of that's because there's a lot of paper Bitcoin that's been created, and I think there are going to be some paper shorts that are going to get liquidated. I mean, I think one of the things I think is true is that Wall Street doesn't understand this asset, and there are going to be some bodies carried out on the next run up. And it couldn't happen to a nicer bunch of people, right?
Couldn't happen to a nicer group.
Yeah.
Oh man,
that's just. I mean, that's
incredible.
I mean, to me, I mean, I think the one advantage I have being 68 years old is just, I have high level of confidence in all this only because I've seen it before. This is just pattern recognition. Do you know what I mean? I mean, I saw the internet emerge. I saw it get way ahead of itself in 2000. Everybody thought, you put .com in the name, stock went nuts. I mean, we were building so much fiber because we were never going to be able to accommodate all the internet traffic. We needed 10x the amount of fiber we had. Of course, that led to WorldCom going bankrupt and a bunch of other bad stuff. That, by the way, reminds me very much of AI. AI is going to change the world. It's meaningful. It's important. It's going to change the world. But it is crazy overvalued frenzy right now. I mean, we don't know how it's going to change the world. And, you look at a Palantir and you look at the multiples of sales or earnings or anything else. And I'm just like, no, this is not a good investment. That doesn't mean it won't go up more. It probably will. So
it's incredible. Incredible stuff, Larry. Any last thoughts?
No,
obviously the Bitcoin really opportunity fund.
I think we've covered the right stuff. I mean, I will say I've got a gold fund, picks gold stocks. People interested in that can reach out to me I've got a website, just Google it. I'm involved with something called the Bitcoin Opportunity Fund. It's my partner, David Foley and James Lavish. They manage that. They've done extremely well. They own Bitcoin. They own MicroStrategy. They own some of these treasury companies. They've done private deals like Anchor Watch, which is providing insurance for custody. I mean, some really smart shit. And if you're accredited, you've got a $200,000 minimum. You can participate in that. It's open. So I just, I would say that if people are interested, but in general, you don't need to do any of that stuff. I mean, to most of my friends who aren't in the financial markets and don't want to trade all the time, I just say, learn how to buy Bitcoin, and then self-custody it. Or at a minimum, get some in your IRA account or your brokerage account, because you can now buy the ETF. I mean, we didn't really go into the pluses and minuses on that, but people can Google self-custody versus ETF and understand the risks of letting. I mean, there are advantages actually though to letting the ETF hold your coins, because you're not going to screw up the the self-custody and the your words and your your password, so to speak. But and some boomers are not in a position where they want to learn how to self-custody, and that's fine. Buy an ETF. The risk, obviously, of the ETF is if the blue team wins and they decide that Bitcoin's ruining their game, they might come and say, hey, you know what, you guys need to turn all that shit in and give them cash, and suddenly you don't own your Bitcoin anymore. So I don't think that's a high probability, but it's not zero.
Do you have, and I'm really glad you brought that up, actually. We talked about this, 3 months ago, whatever it was, but do you have any updates on the like-kind transfers? So talking about the ETFs, I know that's kind of come back up in the news again a little bit.
Okay. I don't know much about it. I know it's in process. I think it's coming. I think it's great if they can do that. I mean, that'll really help some people, because there are people who own ETFs, they have big gains. They don't want to sell the ETF, take the gain to get it to self-custody. I mean, if that happens, it'll be a big, big positive. And
massive.
I think, I think self-custody is a much better solution than an ETF. I mean, you're paying 30 basis points generally to have your money in an ETF. You don't need to do that. But I know that's in process. I don't know where it stands. Hopefully it'll come through, because it'll help a lot of people. So yeah, could not agree more. And we were just talking about, offline earlier about Larry and I will both be speaking at the Canadian Bitcoin Conference and Camp Nakamoto, so the mass adoption events in October. So and I'll link to your book, Larry, as well here, the big print. Check that out. So yeah, I'm going to bring a few hard copy books up to Montreal for the Canadian Bitcoin Conference. So I've been with most of these conferences, I've been trying to sign and sell books if people want to get a hard copy that's autographed.
Yes.
Yeah, and so. I don't think I have much else planned. I think I just kind of made a commitment. I think I may be going to the Lugano conference in Switzerland in October. Yeah,
nice.
We'll see. So
beautiful.
I'm trying to taper back on some of these shows and so forth. You just can't. You
run around. You're everywhere.
Yeah.
Yes. Well, thank you, Mr. Larry Ricard. Thank you so
really
much for joining me today.
See you. I look forward to seeing you in Canada, and we'll talk again soon.
Sounds good. Thank you, Larry.
Great. Take care.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.